Good evening, everyone who are Australian-based. I hope you've had an enjoyable public holiday. And for those who are based abroad, I hope that you've had a good morning or good day, depending on your time zones. For those of you that don't know me, my name's James O'Neill, and I am the country head of FairMarkets Trading. FairMarkets Trading are proud to have partnered with Opus Trading Group, and we're really excited about this particular webinar with Opus's own gold expert, Viane Norman. So without further ado, Viane, we're looking forward to hearing all your insights into trading gold.
Awesome. Thanks so much for having me. And thanks to everyone as well for joining and being here today. So I think we'll just start off with a few things about the forecast and what I sort of see coming up on gold. And then we'll go into some other things in terms of technical analysis and stuff. So the first thing that I'm kind of looking at the moment, well, there are a few things, and gold is at a very significant area at the moment. That's the first really important thing to point out, is because there's been a major support area sitting roughly right here at around 90 to 87 to 90, which we actually saw broke, which is amazing. I have been waiting for that for so long. So we pretty much it's been since 2020, before COVID, that this has not broken, and it's tapped it that many times, 1, 2, 3, 4, 5, and then it decided to break. So now looking at the chart over, say, on a weekly, even, or daily basis, you can see that the break of this level is super significant. It's showing that bears are still very strong. However, there are still barriers in between where we're sort of stuck between at the moment. So in terms of looking at the 4-hour chart, there is a heavy downward trajectory because we have broken through that level, but we still have to consider what's happening at the moment. At the moment, we are stuck in a bit of a sideways motion. We're in, stuck between that 75, 80 level and 55, I would say. Yeah, roughly around 55 and 75. So it's about 200 pip range happening at the moment. This ultimately will need to break for us to decide what's going to happen next. I will say what did happen last night was very interesting. I was waiting for a push up into that 90 region to then take shorts. The reason being is just simple market structure. Looking at that support, it had broken. I needed that retest. So I knew from there it should not continue dropping and breaking. Essentially, when you see gold break those major levels, it does come up and retest it. When you do look at the weekly as well, that weekly closing bearish, when you look in the history, you can see every single time the weekly has closed, it's wicked up. That's really significant for me because that indicates a very strong break on a weekly. So over here, you can see weekly closed up here, weekly closed here, here, here. You've just got these wicks down into that level. So price heavily was rejecting this area. Now we have a weekly close below that level. So it does make sense that price had come up. You can see on the weekly, there is a bit of, efficient, which means this wick needs to come up and fill this area to meet that prior wick for price to be balanced before continuing downside. So that made sense. And then you pair it with, on the 4-hour chart, a retest of that level. So that level needed to come up and retest. Now, does that mean gold should continue downside? No, it doesn't. It can, it's a possibility, and you always have to weigh up two sort of scenarios. You've got to weigh up a push upside and a push downside, because it's either going to do one or the other. And you can't just set yourself to a sort of one-way opinion bias, because the market's always in front of you. You've got to go along with what the market shows you. So at the moment, what I'm sort of looking for is if price can close on higher timeframes. And for me, higher timeframes being 4-hour, even a daily time frame. If you look at the daily here, it's still rejecting above this 75 level. You can see all the candles sort of closing around 75. So there is a resistance there. if we do get a close above that 75 level, you could expect the push back up into this area here where that resistance is. Now, anything above that 90, 1700, you can see the bulls start to push back again, and price pushing into that 1720 as the next barrier. And that being, there is resistance there. And above that, I would say anywhere between like 1730. So that would be my upside kind of forecast if price did manage to break above this resistance here and sustain. But my sort of, I'd say what I would prefer to happen is the downside break, because I've been waiting for the break of this level, I would say ever since this tap here. So it's been a while, and it's nice to see price finally pushing down on golds and actually breaking that support. If and so what I'm in favor of is that downside push. So the next kind of area that I'm looking at, and the first thing that I sort of do when I'm looking at gold, is I always look left after these levels break. And something that's really significant is when you do go to the left and you look below this area of support that it has broken below, it's pretty much a clean run almost every time towards that 45 area. If you look on, say, the 4 hour, it's probably a bit more clear. Let me go back and have a look. So when you look under this, region, especially where it is at the moment at 70, that 70, 75, you could see it's pretty clean all the way down to 45. So I do expect price to continue pushing down towards that area. So that is my next sort of target on a break of 55. So when that support gets a clean, high time frame, 4 hour daily candle close below it, sitting at roughly 50, I'll be targeting that, 55, I'll be targeting that 45 area. And then, of course, if that does break, you've got to, you're looking at a big downside push. By the looks of what's happened in the history, you can see it's pretty clean every single time. And price does, generally, when I see gold push clean on the left, it usually does the same on the right. And I see that happen time and time again in history. There's so many examples where this happens. And when you see these major levels of resistance or support break and it's clean on the left, it usually ends up running through that area really nicely. So that is what I do see happening. But what's really interesting as well is when you do look at these higher timeframes like weekly and monthly, everything is pretty smooth all the way down to 1400 even. So, I don't doubt a big downwards push since we're below that 90 now. So as long as we're below this support here, which is now resistance, price should continue pushing downside. But like I said, you cannot block out the scenario where we go all the way back up. The pivot point for me is that area, anywhere between 90 and 1700. A big thing for me as well is support and resistance to me is not one number. It's an area. It's an area of anywhere between, I'd say 10 to say 20 to 30 pips. It's not a big area. It's a $2 to $3 move, but I never sort of say, oh yeah, this is support at this exact number. I don't like to do that, because what you do tend to find is when price is mitigating around these levels, it sort of bounces around. For example, last night when, if you were to say 90 was that resistance, which it does look like it is in the past, we didn't even tap it. I don't think. Yeah, we tapped to 88, right? So, and you could see it's never ever going to be on that perfect number. You may get it sometimes, but not always. And that's why it's always best to have an area per se as a resistance or support, not just one, line. So also in terms of looking at the monthly, like higher timeframes, you can see it's super clean down to these areas of like 1610. So I do want to see, price push down. But interestingly enough, is we don't have the monthly close below this resistance or support. 16, say 86-ish. So it will help. And how long do we have? We have roughly a week and a half left. So it would help if that monthly does close below there. I'll be even more confident of that downwards kind of push. The other thing to consider, though, is the fundamental drivers at the moment. There is a lot happening around the world, and I always sort of have this at the back of my mind when I'm trading gold. I'm personally, and this is a personal sort of choice, I'm not the biggest fundamental trader. I am like pretty much almost completely a technical trader. I do, however, keep fundamentals at the back of my mind in terms of global events. When it comes to interest rates and stuff, in my experience of trading gold, I've found when these sort of events come out on Forex Factory, technical complements it. For example, when the CPI came out and price dumped, everything technical was showing that sell-off. So it made complete sense. I do find that, you know, like I have found over the history of trading gold that technicals have complemented fundamentals. Another thing as well, like, so you've got to understand that at the moment, things like Putin throwing comments of, you know, a potential nuclear bomb threat or whatever he's saying is going to affect the price of gold, because investors therefore might get a bit, you know, worried, or they might start, you know, coming into safe havens more, which is gold. And that could essentially, you know, take out that downside trajectory. So those things are going to play effect, and you can't predict what's going to happen with those things. You don't know when he's going to come out and say what he says. So yesterday at 4 p.m. in Sydney time, which was right before London, he said, I don't know what he said. He said he made that threat and gold pushed up in a few candles. I didn't expect it, right? So essentially I was looking for shorts, and price kept flying. I had no idea why until I actually saw on the news that it was live news that he was speaking and put a statement out or something like that. So you have to be able to keep those things in mind, because from what history tells us, for example, in this time here, when price did push up to the all-time high, that was because of the Russian-Ukraine war. And there's nothing that stopped that move. It just continued in one straight line over 3 sessions a day. So those are things that you have to understand to just keep at the back of your mind, and know that anything can happen globally to affect the price of gold, and some of those things we can't control as well. So that would change that downside trajectory. And even if it wants to bump up and then go down later, that is something that could also happen. But in terms of, you know, technically right now, this is looking super bearish. Another thing, and if you follow me on Instagram, I'm sure you've already seen this, is looking at what, you know, what's happened in history on gold when it's reached an all-time high, and what's happening today. And it's funny how similar that they look. So when I go to the daily chart and I go to the high made over here in 2011, and I even grab this bars pattern, it's pretty much playing out exactly the same. So that also kind of shows that, you know, we are breaking below this support, which it did over here on the left in 2011, I think it was, or 2012. Once it did break that level of support, this thing just completely tumbled. And it sort of does make sense in a way, thinking about it fundamentally as well, because like I have also said many times before, it's just a bit weird for central banks to be buying up in gold when, you know, it's at high price, you know, points. So I wouldn't be surprised if gold did sell off quite, you know, aggressively, just so that they can buy up these metals cheaper as well. So that's sort of what I'm seeing overall in terms of, you know, forecasting the price of gold. I'm not one to really like to overly forecast too far ahead, just because I am an intraday trader and I scalp a lot. So for me, it's more what's going on a smaller spectrum of things. And like I was mentioning before, in between these two support and resistance levels that are going to make me sort of shape how I make my next move. So yeah, I wanted to also touch on some things that I look at in terms of market structure. So at the moment, I've been doing a lot of scalping, and, you know, a lot of my followers, and I'm sure a lot of you guys have been following along as well and enjoying that. So I thought I would talk a little bit about market structure in terms of scalping and how simple it is. Like, It's so simple, and I just use the most basic things. And I think a lot of traders actually forget how those basic things can actually work really well. And that's to do with market structure, right? So a lot of people try to find so many other things to use, but when it comes to scalping, you're really only aiming for anywhere between 20 and I'd say like 60 pips. Like, that's what I consider a scalp. I know some people do consider scalping like 100 pips, but for me, that's my intraday trades. So I still do both as well. But in terms of scalping, I just wanted to show some things that I use on the 5-minute chart when scalping that work exceptionally well. And it is the most basic thing. So what I did want to say before I do show this, it is really important that you're using top-down analysis no matter what style of trading you're doing, because you have to understand, number one, direction. If you don't know your direction, you're going to get yourself in trouble, maybe making decisions for one. For example, holding trades that maybe you're counter trend trading in a scalp, and you should not be holding that trade. So if you're going against the trend. So that's why, top-down analysis is important. So you've got to understand on the weekly, daily, and 4-hour, the direction of the market. And I think it's fairly obvious at the moment that it is in a heavy downside, direction. But if you are to zoom in and you have a look at, and this is on a 4-hour, you look at this area right here, you can see there is an upwards, move happening. And essentially, you know that this is a support level. It was broken and it's coming up to retest to continue the daily downside sort of lower lows and lower highs being made. So that, there, like, it's bearish, price is going down, right? So when we do zoom in and we go to the 4-hour chart and we see these uptrends as well, it's also understanding how to make decisions when you're moving in this area here, when you're going back up and you're retesting this level of resistance, which was previous support. So now going on to the 5-minute chart, I literally keep it so basic. And if you've done my scalp course, you would have seen that there's a lot more to it. But something that I also use quite a lot is just market structure on a 5-minute chart. And it is literally just grabbing and finding points of support and resistance on a 5-minute chart, and then, taking trades based off that, and then aiming for 20, 40, and then 60 pips. That's all it is. So I'll show you some examples now of what I mean. I'm trying to find a good area where there's a lot of movement. We'll start here. So on the 5-minute chart, which is this chart over here, the first thing you do is I'll grab this level of support. So I know that there is a support around here. So all I would be literally doing is buying off that support. Now I can see there's a resistance here, and you can see it's a resistance here. You could take sells from this point. Now, once it's broken, I will be taking that pullback on a 5-minute candle and then buying. And then I would obviously be looking left to see when those next levels of support and resistance are. But essentially what I would do is take profits after 20, 40, 60 pips. And when you look at this, it's literally, that's already 20 pips right there. So I've already taken profits on some of those trades. Now, when I look left as well, there's an area here. You can see it's resistance. It broke, it became support. I would then take that buy as scalps. When it's broken above, come back, retested it, I take that buy. And gold will always do this. You can look here, there's support when it broke it, retest, and I was selling. Another example was at you'll see them everywhere, but you can even see here, you've got this level of resistance, it came up, tapped it, it rejected it, there's a sell-off. You can see over here, there's a support. Once it's broken below it, retest, sells off. And price will always do this every single time. You can see it right here. Support, broke below it, sell. There are tons of opportunities doing this. Now, I even go really micro, like zoom in micro. And I'm looking at this point here, where this price bounces off. That's a support level. When it broke it, what did it do? Price came back up, sold off. Price came back up, sold off. Went back up, sold off. Same thing every single time. Same thing over here as well. Now I even go down here, you could see another level of support forming. When it broke it, take the sell, sells off. That's literally all it is. Over here as well, support. When it broke it, came up, sell. And I'll just do that all day. Literally you can do this on any session, because over every session, you're going to get 20 to 40 pips, and you can get 20 pips and then catch 20 pips again, and you'll end up catching 100 pips before London even starts. So what I used to do a lot was only trade New York and London and try catch those bigger moves. But I found while scalping, I was able to do it before those sessions even started, and I could be finished for the day. You can see here as well, there is a bit of support. This support, resistance, when it broke, retested, take the buy. Same thing, came back, buy. You have that support here. Broke, retest, sell. And I think if you've seen my other webinars, you'll see that like price tends to push usually into where those bodies are. However, this happens more on bigger time frames, so 15 onwards, not so much the 5, but you will see it happen sometimes on the 5-minute as well. But yeah, like you can see here, it comes up pretty close to those bodies as well, and then sells off. And that's just because there's more, that's where sort of your liquidity is lying. And then if we go down to what's happened recently, there were so many opportunities in, to scalp. So let me go back to where we currently are. Over here. So a lot of the trades that I've been taking lately are literally just based off this. You've got this support on the 5-minute. Once it broke, retest, I'm selling. Same thing over here. This broke, retest, sell. And these are like really minor market structure moves. I think a lot of traders, from what I've seen in my experience of teaching people, is that they're so focused on those large time frame market structure, they forget that you can still use that on a small time frame, and it's game changing once you realize that, because there are literally opportunities left, right, and center to be taking these trades. And it's so clear and so easy to see. You've got this support here, it broke it, retest, and sold off. Same thing here. You've got this level of support, broke it, retest, and sold off. All up here as well. Same thing, same thing. Another thing is I do go even more micro, because like I said, I am taking small moves. And I can see this support area when it broke, I'm like taking this sell, I'm just taking 20 pips every single time. So what's really important when you're scalping is just taking profits, because you're scalping. You're not aiming for 100 pips, you're scalping. If you see a bigger move because you've taken it from, for example, the resistance up here, which was really nice, and I'd done this many times when it hit into this level, was I was holding a runner. So I would close, I open usually a few positions within an area. I would close most of them as my scalp, and then I would leave a runner. And if it ran, it ran. If it didn't, I was knocked out at break even. So there was no risk on the trade. And that worked out really nice as well, because you've got this major level of resistance and you have this major support that it keeps bouncing off, and we're technically just moving sideways. And so you could then hold a 200 pip move, which was great. I love when gold does that, because it makes it really simple when it moves sideways, because it's literally just bouncing off resistance and support, and you're just buying off the bottom, selling off the top. So I was able to do that a few times this week, which was good. And then again, when you're zooming in, let me remove my drawings. You'll see all those moves in between. You've got that break of that level here, retest, sell. And then, so last night, or for me this morning actually, we had the FOMC. So I think the Fed increased interest, the something points, they increased something, whatever it was that they increased. I won't lie, I don't even look into the news too much on what they do, but yeah, price just flew and then dumped off. So And what it did was, funny enough, like I said, I find fundamentals respect technicals. It went straight into that resistance that I wanted to see it retest, which was that 90 level, that 87.90, and it did it literally perfectly. You'll see it on the daily as well. Actually, the 4 hour is the clearest where you'll see it. You've got that really strong level of support, tapped it as resistance perfectly and just sold off, which was amazing because it did like 200 pips. Even more, I think it did 300 pips from roughly 90. Yeah, little over 300 pips. Amazing move. And it was literally just the retest on that 4 hour of that major support that broke and became resistance. So yeah, again, on the smaller time frames, I'm just looking at those areas of support and resistance, and on breaks, I'm waiting for retest and I'm either buying or selling and then taking profits. It's as simple as that. There's no funny business, nothing technical, nothing too technical, sorry. There's nothing like crazy, or there's no magic trick to it. It's very simple. You've got a level of support, you look for it to break, retest, take the sell. Now, once again, I'll say it again, when you're looking at doing these smaller moves, just be aware of what's happening overall. Right now, I was aware that on the 4 hour and daily, we are mitigating in between a range. So I knew where we're moving from X to B, X to Y, we're moving between these two levels over here. Yeah, that's pretty much it in terms of the scalping. I do use the line chart to find support and resistance really easily, just by looking at where price does these sort of, A shapes and these V shapes. They form support on the Vs, and on the As, they form resistance levels. You can see here, you've got a V, it broke, it became resistance. There's a sell opportunity for me. You've got the same thing here. You've got a V, break, becomes resistance. The V is also here. So it's this area within these 2 points here. Once that breaks, I've got a little resistance, and I'll do that on the 5 minute, the 15 minute. I do that all the way up into the hourly chart. And you could see it really nicely on the 4 hour as well. You can see really nice levels of support and resistance, so much clearer than candles sometimes, just by looking at line charts. So I use that a lot when I'm scalping. And also when I'm looking at higher time frames to see, what's going on in terms of like forecasting the market. Like, it's very clear on the daily over here, when I look at where this has formed this V, that I have a level of support. Same thing over here. You could see there's a V over here, so there's a support, and that's sitting roughly at, where is it? The 45-ish level. It says 43. That 45 level that I mentioned before, yeah, it's perfectly sitting there. So I see those levels very clearly on the line chart. And you could see here as well, you had this area of resistance with that A, broke it, became V support. So V's and A's is how I find support and resistance on a line chart. And then I always go back to candlesticks just to see where higher time frame candles are closing and stuff. So do you guys if you have any questions as well about scalping, please do let me know and I'll answer them now before I move on into some psychology things that I think are really important in terms of your trading.
I believe there's a couple of questions in the Q&A. So Alfroz has asked, do you use any indicators along with support and resistance areas on 5 minute TF for scalping?
Yes, I do. So thank you for your question. And yeah, I do. I use my indicator actually. So I've used my indicator for about, I'd say, like almost 3 years now. So I love my indicator when I'm scalping. When I'm looking for something, I just turn my indicator on, and if it complements what I'm seeing, I'm like more confident in that trade, I would say. The reason being is because you can't use indicators on their own. I don't believe in doing that, but my indicator I have used for a long time. I use it in scalping, intraday, swing trading, everything. I use it on all time frames. It just helps me with an extra confluence system, pretty much to what I'm already seeing technically using market structure or parts of my strategy. So what my indicator does is it breaks down all these confluences. I actually turn the moving averages off. You can keep them on if you want. You can choose how many you want it to show. Like if you want a minimum of 5 confluences, you can also do that. You can also display the indicator name. So for example, if you go on to an hourly, because there's going to be heaps on the 5-minute, it will show you what buys are sitting here, you know, like what confluences are showing the buy and how many. So there's 6 and it's all these things. So because I don't literally sit there breaking down all these things like MACD, RSI, stochastic, and all that stuff, it helps because it does it for me. So it's fully coded and everything. And it's, for me personally, it's worked really well. And that's why I love it. And it's worked for me in all styles of trading. And it does work on all pairs as well, which is cool. So that's worked really well for me. Other than that, I don't use any other indicators, in all honesty. I love a clean chart. I don't like to get too messy on my chart. It just confuses me. If I overthink my trade, I can make mistakes, and that's something I don't want as well. I literally just want to see what I see, take the trade, and if my snipe indicator shows me extra confluences, it makes me feel even better about the trade that I'm about to take. So yeah, that, I hope that answers your question. But nonetheless, if you have indicators that work for you and, you know, it does the job for you, like if you use MACD or moving averages or whatever it is and it works, just keep using it if it works. I'm not, you know, like I'm not suggesting don't use them. It's just that's what works for me.
And we've got a couple of more questions. There's a lot of questions, so we're not going to be able to get through all of them, but a couple more for people who got in early. So Edwards asked, when you're scalping 20 pips minimum, do you do a 3-to-1 RR still? And then he's followed up with, what's your risks on these scalps?
So in terms of risk management on scalping, it's a very difficult thing. And I'll tell you why. If you don't have a high win rate scalping, I suggest you keep practicing until you do. Because the problem with gold is gold moves very quickly and it will move in both directions quickly. It's going to be very difficult if you have a 1-to-1 or even a 3-to-1 and you're only catching 20 pips. Where's your stop loss going to be? It can't be 5 pips. It can't be, 10 pips. It's not going to work because gold will fluctuate that 10 pips up maybe against you, right? So I do have slightly bigger stop losses. Sometimes I have 30 pips, sometimes 40 pips. However, my win rate's over 93% with us scalping. And it's been like that for the last 3 months. So I'm confident doing that. Before I had that win rate, I was not confident doing that. I was scalping was quite difficult for me for a long time. Until I got my rhythm doing it, was I comfortable even, sharing the scalps that I take, because my stop loss does need to be significantly, sometimes a little bit higher, and sometimes I won't get that 60 pip move. I'll only get 30 pips, but I take it anyways. The main thing is for me is when I've done 20 pips on a trade, my stop loss is automatically at my entry price, so my risk is taken away. And for me, because I've taken, for example, I'll take so many trades in a week, I'll get maybe one stop loss that whole week, and I'm taking over 10 scalps a day. The reason, so that's the reason why I'm having a little bit bigger stop losses than sometimes my reward. But sometimes, we'll even get like 70 pips or 80 pips just because the trade ran, and that will usually happen during New York session. So yeah. And I think the next question is quite similar. I think I answered that.
I think a lot of the questions have been answered. One question which Rajesh has asked, which is a quick question, is which is better, line or candle chart for entering trades?
I think the best for me when it comes to entering is always candles. I don't enter on line charts, because if you do have a look on line charts, you'll see that there is the wicks you cannot see. So yeah, I do like for example, let's see if over here you can see that wick. No, you can't see. Price did go up there. You can't see that on a line chart. So you've just got to be careful of that. I wouldn't be entering trades personally on a line chart.
Excellent. Well, we might move on to the next part of the seminar, which is on the psychology of trading.
Awesome. So I think this is a really important topic. I don't feel like a lot of people touch on, because I've spent so much time trying to figure this out myself over the years. And it is a really tough one, but from my experience, I'm happy to share what I've found, most useful. And it's really to evaluate yourself and your own trading and what you're doing, and whether that be, analyzing all your trades through the week on a Saturday, or making a journal of everything. I think those things are really important because they do help you improve. When I was I was always a great intraday trader, and I was never a great scalper. And I had to work on becoming better at scalping, because I actually loved it, even though I was terrible at it. When I first started scalping, I was so bad. Like, it was almost like I didn't even know what I was doing. I was just entering trades because I thought it was a scalp, right? And you're just catching a small move. So you can pretty much guess what's going to happen, but in actual fact, you can't do that. So my psychology also got to me, because I was taking losses, for example, and I did need to improve. So what I found worked really well was actually analyzing what I was doing and where I was going wrong. So whether that be looking at trades that aren't working out and going back and asking yourself why that didn't work out, why you took the stop loss on this trade, or why did you take the win on that trade. That's also really important, to analyze your winners and not just your losers. Because when you start breaking down the whys on on why you're losing or on why you're winning, you'll start being able to amend and adjust and then improve after that. So if you know what you're like, why you're stopping out, and a lot of the time you will go back to the chart and you'll be like, that's why you didn't see that. Or, you'll come up with things, or you'll see things on the chart that you didn't see when the chart was live. And that comes in par with when you're back testing, you can pretty much, unless you're using the replay button, even if, you're not using even if you are, using the replay button, you still know what's about to happen. So in actual fact, it's not live. And that's period. It's not live. So unless you're live trading, there are going to be things that you miss. And it will happen. You'll make the same mistakes, maybe even when you're really good, even when you're a great trader and you've become so, like, even today, I still make mistakes sometimes. Sometimes I just completely miss my trade and I'm like, how did I not see that? How did I see a sell? It's a clear buy, and that will happen. It always creeps up onto you and you've just got to expect it. But the most important thing is to always pull yourself up, analyze what you did wrong, understand why you did wrong, so that next time you can be prepared and you can understand, how to change that. When you're learning, it's even more important, because you're then thinking, okay, why am I getting this wrong? And you might be getting that same thing wrong every single time. So then you might have to find a solution to that problem. So what I used to always do is, I knew my biggest problem would be like over trading. So I'd be like, I need to find a solution to this over trading. And how am I going to do that? I'm going to set rules, or I'm going to say, this is the max amount of trades I can take today. Or one issue I used to have was I used to risk my profit. So now it's like, okay, if I've made that profit, I've made the profit. It's time to go to bed for me, because it's nighttime in Sydney when I'm usually trading. So it was just implementing things constantly to then change up my trading and be better, along the way, and fix my psychology. If it was me getting emotional that day, it would be like, okay, I have to make the decision to not trade. I have to not trade, because I know if I'm emotionally trading, I'm making irrational decisions and I'm taking losses. So if I trade today emotional, I'm going to lose money. I will not make money. So I'll call it a day. And I have those days up until today. I have days where I'm not mentally able to make decisions. And I know that even if I think I know what I'm doing, I still make mistakes. I still somehow make mistakes. And it's actually, It's crazy when you start to realize that when your mind isn't there, you actually cannot make the same decisions you make when your mind is fully there and you're in a good place mentally to take a trade. And I will guarantee to almost always make mistakes and take losses if my mind is all over the shop. Say something's happened to me that day, or I'm experiencing something in my personal life, whatever it is, it will directly impact my trading every single time. So my solution to something like that would be to not trade. I will literally not trade. If I cannot, if I know and I'm aware that I'm not in a good space mentally, I just will not jump on the charts and trade. So that was a big game changer for me, and it helped so much. It'll save you a lot of money, trust me. So that's a really good thing to implement. So the main thing to take out of this is what you need to do when it comes to psychology is find your weaknesses and then find solutions for those weaknesses. And if it helps, write them down. Have a whiteboard or a piece of paper on your desk where you trade, and have set rules there that stop you from making those same mistakes, even those same psychological mistakes like over trading, like over risking on a trade. I used to, when I'd make profit, triple, quadruple my risk. That's a big no-no, because you just don't know when that stop loss is going to happen. So that was a lesson for me as well that I had to learn from, not to up my risk just because, so risk management, which is another thing that I was going to touch on, is really important. You have to stay disciplined. You have to be aware of your risk on every single trade, because on every single trade you take, that is not money in your pocket until that trade's closed and that money's withdrawn. So you need to be aware that that money can disappear. So risk management, if you want to be a trader long-term and you want to succeed in this and you want this to be your full-time, which I'm sure a lot of you do in here, you have to be so strict and disciplined with your risk management, or you will not last. I can guarantee you will fail. I've seen so many people fail from just constantly being greedy and over-risking because they had one winner doing it. Just because you won one trade and you got lucky and you risked a lot and you made a lot of money doesn't mean that's going to happen every time. Eventually, you're going to run dry and your account's going to disappear. So really important. And that's pretty much it, to be honest, in terms of psychology. I think it's a very personal journey. I think it's extremely personal because everyone has different weaknesses and different strengths as traders. So yeah, if you guys have any last questions, I'm happy to answer a few while we have some time, or if we have time. And that's pretty much it, guys.
So we do have a couple of questions. So Rajesh has asked, does your post New York Open SR trade still work daily for 100 pips?
They certainly do. I use that every single night. So after New York has the biggest volume, so it's another great point to raise. Understand your sessions, guys. When you're trading gold, the biggest volume's happening over New York, and you'll be guaranteed 100 pip move in one direction over New York, sometimes in two directions. So that might be even 200 pips. That happens every single day. I still use that every single day. So when I'm scalping throughout the day, I'm also taking an intraday trade over New York every day.
And Michael asks, what size stop loss do you use?
So I mentioned that before. I use roughly 30 to 40 pip stop losses in general.
Well, that was certainly a very, very educational piece, and it was amazing timing to be able to hear your insights into gold at such a pivotal point in gold, where it's, as you said, broken that support level, and it's a really interesting time to be in the market. So thank you so much, Viane, and on behalf of FairMarkets, thank you all for taking the time. This webinar has been recorded, and so you'll be able to re-watch the webinar and get trading insights. And like Viane said, sometimes when you replay trades, there might be things that you miss, And I'm certainly sure that in this webinar, that even though we've all attended, there are bits of information that we might have overlooked and missed. So it's a great opportunity to rewatch the webinar. So thank you so much, everyone, and thanks, Viane.
Thank you so much. Thanks for everything, and thanks everyone for coming.
Thanks, everyone. Have a great night.